Folks, today I want to talk about 90-day breakouts and the significance of the 90-day breakouts. Specifically, I want to talk about 90-day breakouts that occur from flat top formations, and that's where the biggest key is. Now, let me show you something interesting so you understand where I'm coming from, because this is my filter, all right? I'm going to show you right now. We're going to go through my little search scan, and here, you see here 90-day breakouts? If you click on this, there are 97 90-day breakouts right now and only 6 90-day breakdowns, so we're obviously looking to the upside. But after looking at these 97 breakouts, and I looked through each and every one of them before doing this video, I specifically only selected 6. So what is so special about these 6 assets that are breaking out in comparison to all the others? I mean, a 90-day breakout is a 90-day breakout. It means it's making a 90-day price high. That means it's the highest price of the last 90 days. And just to give you some background, the reason why I used the 90-day breakout is because I did some back testing many, many years ago and over those years, and I found out that there's a window between 80 and about 85 to about 100, 110 days, which tends to give the least amount of false breakouts. In other words, if you trade a breakout from a 20-day high, the odds are very, very high that breakout is going to be a false breakout. And if you extend the time period all the way to 60, 70, 80 days, it tends to get better. But here's the thing. After a certain period, after about 100, 105 days, 100, it tends to go the other way. So there's a little sweet spot between, say, 85 and 110 days. There's really nothing special about 90 days. I could have picked 95 days. I could have picked 85 days. I could have gone as far as 100 days. But I found out right around that 90-day sweet spot, 90-day high, is a really good time to, when you see a 90-day breakout, which is like a 3/4 breakout, because you've had not 3/4, excuse me. You've had a period of a quarter during that time. So it tends to move along with the earnings season. It tends to move along with the rhythm of the market, because the market is based on 90-day windows. That's a typical period that we have 4 quarters. Each quarter is made out of about 90 days. So give or take. So I find that 90-day breakouts tend to work and produce the least amount of false breakouts. But there's another little secret that I learned, and that's what I'm going to show you in this video. It's not just about 90-day breakouts, because again, there's 97 of them right now, and I've only been able to pick 6. So what is so special about these 6? Let's get into that right now. First stock is Snap. What does this company do? Well, first of all, the company has given us 218% over the last year. So we know this stock has been giving us a lot of upside momentum. Most people know that Snap is a social media company. Snapchat, we know what they do, especially if you're a kid or if you have kids. Most kids or teenagers are on, or young people are on Snap. I'm 50 already, so I think there's like a little rule that says if you're over 50, don't be on Snap. But all jokes aside, it's trailing close to the 50-day moving average. But if you look at the price action leading up to this 90-day high, the highest price over the last 90 days, and I'll go back as far as you want me to. But notice this period prior to the breakout was not moving up, it was moving sideways. That's what I call a flat top. Because here's the rule, and you need to understand this. The longer an asset moves sideways, the better, the more powerful the breakout that follows will be, and the less odds will be that that breakout will fall back into the range. Perfect example, look at this congestion. Long congestion, we have a strong breakout. What does the breakout do? It doesn't fill the gap. It continues moving higher. So I like to see these congestions prior, or consolidations prior to a breakout. A typical pattern of a stock that's moving higher for me is like this. In other words, you see a congestion, then you see a vertical range, then you see a congestion, then you see a vertical range. So when I look at a stock making 90-day breakouts, I want to make sure that that stock was congesting for a good amount of time. The longer the better, to be quite honest with you. I mean, obviously it doesn't have to be years, but a few months, a couple of quarters, a few weeks, just to give that momentum that was preceding the congestion time to cool off and the stock to start trading at its fair value without a lot of speculative effort and volatility. And also, this goes without saying, But when you have a stock that's congesting, it has less volatility. And whenever you have less volatility, you have less risk. So your risk to reward will be better as well. So Snap is one of those stocks that I like out of those 97. I thought it was 96, but I guess it's 97. Next one, PANW, networks, network security. The stock gave us 61% over the last year, outperforming the S&P and the NASDAQ. Security is huge right now with cloud software, and Palo Alto is the leader. Now, a lot of traders believe the stock was overbought, and look at what happens. We have a congestion, it breaks down, shakes out the weak hands, and then the stock breaks out again. Again, nice congestion leading to a 90-day breakout. Very, very important, and I like this stock. I've been in love with the stock for years. Nothing has changed. This is an ETF. This is the CYBR ETF, and it's given us 20% return this year. Over 5 years, 400% return. Now, what I like about this asset, it is a prepackaged software indice. It provides information technology solutions, offers services which protect organization, cyber attacks, cloud software. CYBR, oh no, this isn't the ETF. This is the actual software company, excuse me. It's very similar to, there's an ETF called CYBR ETF, but this is the actual stock, ticker symbol CYBR. Sorry for the confusion. It's very similar to Palo Alto, prepackaged software. Hasn't performed all that great over the year, but over 5 years, it's been going crazy. But if you look at this stock now, it appears to be bucking the trend. And folks, 2021 is a huge year for cloud. Anything relating to the cloud is going to be big, big, big. Again, notice the consolidation. Notice the congestion leading to the breakout. And this thing doesn't use 90-day closes. It uses 90-day highs. So although price went higher here, it didn't close here. So right now it looks like it's breaking out. And again, I love the consolidation. I love the fact that this asset is moving sideways. Look at the volatility when it's moving vertically. Look at the range. Imagine using a stop loss on this day. And now look at how quiet the volatility is. Lower volatility, lower range, tighter stops, better, lower risk, higher reward. CYBR software. Sorry, I thought it was an ETF for a minute. Next stock, NVST Holdings. We're moving on from software to medical products and supplies. What does it do? Manufactures sends dental products primarily in the United States, which means implants, dental implants. Not a very this sector, dental wear, dental supplies. It's a fairly secure industry. It's a fairly defensive industry because people, when they need dental wear, people are not going to take vacations. They're not going to go on cruise ships, but they're going to get their dental wear done. And again, there's not a lot of companies that are making headways in this sector. But again, look, nice little congestion, nice consolidation. The stock breaks out. And again, if you look over time, look at this nice, clean trend. Look at how well this stock trends, right? It's a beauty. I love it. I love the fact that volatility is not increasing. NVST, NVST Holdings. Again, notice that nice trend in it. Next stock, there's only two more. It's PD. What does PD do? Again, internet. We're going back to where we started. PANW and CYBR were internet companies or software companies. Digital operation management solutions. Provide service based on platform pager duty. Develops DevOps, information technology, business to prevent, resolve business impacting incidents. Sounds very similar to security. Again, prepackaged software, the cloud. These sectors are not going anywhere. 1 year return, a hefty 121%. And if you look at the chart of this stock, let me show you this. You guys got to see this. Takes a minute to load because I have a software running in the background to record the screen. Oh yeah, I'm fancy like that. Look at this. Not only does it go sideways, it kind of bends a little bit before breaking out. I love, love, love these type of trading patterns. And again, look over time, vertical, consolidation, breaking out. Love it, love it, love it. The stock, and if you look at it, the stock, it's coming up all the way to its previous highs, which is when it started trading at about 60. This stock has a lot to go. And the fact that it's breaking out above the 90-day high right now, when the NASDAQ is doing so-so, very, very positive. Last but not least, This is the oil fund. We're now looking at the asset that tracks the oil market. That's right, folks. Oil is finally breaking out. So this is the ETF. I confused the CYBR with the ETF, but this is the actual ETF. So if you want to get into the oil market, and I believe oil still has a lot of stuff to go, I wanted to show you the long-term chart. But at the same time, so it's got a long ways to go. I would probably stay away from this one until it went higher, but if you're a value guy or if you're look at this sideways consolidation, we're looking at a 1 month. Let's look at 3 months. It's finally breaking out. It's trading above the 200-day moving average. It's trading above the 50-day moving average. It has what we call the cross, and it's breaking up to the upside. Now, again, if you look at the long term, this thing has been consolidating for a long time, almost a year, and finally, it's breaking out. Now, if you want to be a safe investor, I would wait for it to trade above the $50 level. But again, it looks like oil is coming back up. It looks like it has bottomed out. So again, let's look at these 6 assets. We got Snap. I love this breakout. Again, congestion, breakout. I'm trying to get you guys to understand and look at visually stocks that are going through 90-day breakouts that have a congestion period preceding that. And it's one of those things you got to look at visually, because if you just look at a computer at 90-day breakouts, you're going to get a lot of targets. Again, so here's PANW. Let's look at it on a 3-month basis. Look at that nice, beautiful breakout following congestion. Snap, 3-month, nice breakout following a congestion. CYBR, nice breakout following congestion. This doesn't count because it closed in the range. This day right here. Then we got NVST. Again, notice nice congestion following a breakout. PD. Look at the 3-month range. See that? Look at that. Nice flowy sideways trading action, and then it breaks out. Give the stock some congestion and consolidation before breakout. And the most speculative one, the one you got to be really careful one, is US. That's following oil, but in the short term, it's having and showing a good breakout. I hope this helps and gives you a good understanding of why I use a certain amount of visual analysis when I'm targeting breakouts, all right? 90-day breakouts are really great, but usually there's a lot of them. And sometimes there's few of them, but you got to combine a breakout with you got to look at what happened before the breakout, at least for a few weeks or a month. And the more congestion and consolidation and less volatility that exists, the better the odds those breakouts will be meaningful. So again, we got Snap, Palo Alto, CYBR, NVST, PagerDuty, and USO. I hope that helps.